Hello everyone, and welcome back to Daily Update on 1000 Days Challenge, the day 697. So let's get things started. Alright, so first and foremost, equity balance remains the same, no change in terms of that. If you're looking in terms of the financial market update itself, like what I mentioned, looking in terms of US market itself, currently we do see a red bearish candlestick formation yesterday itself. So tentatively, I do lean towards some sort of like a bearish momentum today itself, and we do look to be forming somewhat like a bearish inverted red hammer candlestick itself. So the key thing that I'd like to see is that even if we do form this red hammer candlestick, is that tomorrow we do not open below this 20 exponential moving average on the daily chart. Because bearing in mind that this is previously a support region, so now it will tentatively be a key resistance region itself. So if forming a red bearish candlestick itself, and then if we do close below the 20 exponential moving average, there will be a very clear kind of a high probability kind of bearish setup in terms of a short-term momentum wise. So over here on the Nasdaq, we do see that it's tentatively looking to break below the 20 exponential moving average. So we do think, we do see that kind of weakness in terms of a bullish bounce in that sense. So be very cautious in terms of the market in this coming week itself, that I'll lean towards further bearish downside. However, if we do bounce strongly above from here to here, we do bounce between the 0.382 and 0.5 Fibonacci retracement level, then tentatively it could be a very healthy retracement, and we could still proceed to see a nicer really bear rally in that sense at the very minimum, or even a shift in terms of momentum wise. And if you look in terms of the China equity market itself, like what I mentioned, it's been coming too steeply up towards the upside, so I say it's a matter of time before we do see some sort of retracement. And it does look that today, after today, we do form this kind of red indecision candlestick right at this key region itself. Is a very, very nice signal that you generally do not see very often. I do mean that there will be very likely that we do see bearish momentum in the coming few days. The question is how far we retrace from here. So from here to the bottom over here, we do retrace between 0.382 to 0.5 Fibonacci retracement level at most. I do lean towards a very strong bullish momentum thereafter. However, if we just strongly drop down to find support at 0.5 Fibonacci retracement level, it will be very likely that we could continue further downside, perhaps from a double bottom formation as well. Otherwise, this itself is a very steep formation, and then you can see that over here we are leaning all the way to the side. I do not think that we can just break it up, and we do break above, then I'll also wait for retracement in terms of pullback wise. So same thing we're seeing over here in terms of KMAC wise. So it's just as isn't as steep in terms of ASHR, in terms of retracement or the bounce level as well. So for KMAC wise, I do think that we are consolidating here with a much nicer pattern. So if we do break above that, it will be a much nicer signal in comparison to ASHR, whereby the climb is way too steep in our opinion, and that is much more likely to swing towards the downside in the near term. But that doesn't mean that the reversal or the long-term bottomism form in that by I would say that the long-term bottom could potentially have been formed for ASHR. It's just that with this kind of very sharp incline towards the upside, like steep climb towards the upside, you do tentatively see some sort of retracement first before we see a continuation pattern if it does happen. Alright, otherwise, finally for Bitcoin itself, we do see some sort of bearish momentum which seems to be able between S&P 500. So tentatively is still in terms of green wise for the day, but bear in mind we did form two consecutive red candlesticks. So we do not see a spike in terms of volume. That's a very first good sign. So we do want is actually a weak retracement, finding support between the 0.382 and 0.382 and 0.5 Fibonacci retracement level at most. So if we do find support over here, we do bounce, it could potentially be a very nice retest at this 20 exponential moving average. If you do see a clear rejection over there, then tentatively it would not be nice. I'll lean towards further downside. However, we will break strongly above it, potentially find support like this, and then we open higher above. There's the three criteria. We go to break above it, stay above it, and then break above the previous day whereby we find support away. So it takes 3 days in order to form a very clear, nice confirmation pattern in order for less reduced probability that we could actually fall towards the downside in that sense. Alright, otherwise that's more or less about it. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care. Bye-bye.